Welcome everybody. This is the Thursday evening Viper Trading webinar. Today is Thursday, April 11th, 2019. Everybody's here, of course, to learn how to trade the futures markets. And so that's what we're going to cover tonight. Tonight's topic is detailed trade entries. This is part one. I was going to do part two, but that's been rescheduled. Gary's actually going to take this Saturday over for me, so we're doing a little swap-a-roo there. But without further ado, let's get our disclaimer out of the way and get over to some charts, which, of course, is why everybody's here. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. Excuse me. And of course, everybody here does know that you do trade at your own sole discretion. Okay, now we took a poll in the pre-webinar discussion here, and we took sort of a vote on what everybody would like to see. Many of you put in crude oil. And so that's what we have here. If you are brand new or visiting, we have a lot of new faces in here. So what it is here is we are connected to a data feed to our broker, NinjaTrader, who provides the data for the futures instruments. And if you've been in our live trading room, you know that we trade 4 instruments in there. Crude oil is, of course, one of them. Gary opens up the room at 5:55, which is 5 minutes before the crude pit opens at 6 a.m. Pacific. I'm here in California, so all of these times are Pacific time here. So wherever you're located in the world, just translate it to your time. East Coast, of course, add 3 hours, etc. Yeah, so that's what we trade. We trade ES, of course, the E-mini S&P futures. We trade the Russell. A lot of people trade that, RTY. She's actually started to calm down a little bit, which is good. And gold is the fourth chart. We're going to look at that tonight. So what we do here is we take advantage of short-term bursts in volatility to get in and out of these markets. And we use a 4-range chart. We got away from time-based charts a long time ago. And what you're looking at here, of course, are the Viper indicators on the chart. They are the background colors. Excuse me, just taking a little sip of tea there. The background colors, green, red, and this sort of in-between opaque type color. Bar colors, of course, blue, yellow, and red. We have the power meters, which are the 4 trends on the charts. We have the predictors, real-time support and resistance. Gary puts those up on the charts in the room. And then, of course, the most prominent thing on here is the bands. Davin, everybody seeing the crude chart? Davin, not seeing it? Toggling back and forth on a crude oil chart. CL, everybody seeing it? Anybody not seeing my cursor move in a circle? Crude oil moving back and forth? Yes? Davin, you might need to log out and come back in. There must be something with the video there. So try that. Just try to bip out and come right back in. Should clear that up for you. Excuse me. Yeah, so we have the swing levels. We have the power meters. We have the predictors. And, of course, the most prominent thing on here is the bands. The mid-band here is the thick middle line called the mid-band. And then we have 1, 2, 3, 4 bars below it. 1, 2, 3, 4 bars above it. This is line 2 at the above the band 2. And the thin green line is, of course, line 6, which is above band 6. Now, any questions on what the indicators are? Questions? Now, before we get into detailed trade entries, we got to kind of lay a little bit of a sort of a foundation down here, and set some expectations as to what you're looking at. And this is really critical. It's what we call the market condition. The market condition is something before you take any trades in any futures market, you have to know what the market condition is. So what does that mean, market condition? Is that like some kind of conditioner you rub into your leather seats? What's a market condition? What is that? What am I talking about? What does that have to do with anything? What is the market condition? You got to know that before you take any trades, so it's pretty darn important. Excuse me. Up, down, sideways? A personal rash? Hey, Bruce. Got the humor going like usual, huh, Bruce? Yeah, you have to know whether, and I'm just going to quickly put this up here for those that are new, so you can, get on board with what we're doing here. And so markets do three things, of course. You have an uptrend. Oopsie. In an uptrend, you take longs only, with some exceptions. We'll talk about that. Of course, you have a downtrend. Shorts only. And then you have range bound, or chop, or sideways. There's different terms for it. Sideways. Which could go either way. I mean, you could trade both sides, or you could stay out. Okay? So let's take a minute and look at some market conditions and see if we can figure them out. Let's start on crude right here. How about this area here? I'm just going to ask some really simple questions so we all kind of get organized here in the right direction, so that we can start to decide, okay, we taking markets short, we taking markets long, how do we look at what's going on here, right? Now, what would you say the market condition is in this area right here? Here, I'll put some lines on the chart. This is going back to the 8th, which I think was what, Sunday or Monday? Or last Friday, I think. This is in the pre-market session. Basically from about there to there. What's the market condition on crude oil right here? Sideways. Good. Sideways. Now, a lot of people, I want to show this, and most of you know this, of course, the way that we, identify the market condition when we're sideways is as soon as we see some swing levels established, swing levels being resistance and support, we come in and we put lines there. That's why Gary spends so much time drawing lines in our room. And everybody should really learn this important skill set, is as soon as you get a swing up here and you get a swing down here, you put those lines in here, okay? You put those lines in here, and we have a saying, as long as you remain within the confines of the lines, you are said to be range bound. Now, the minimum criteria to trade a range is 20 to 25 ticks. And the tops and bottoms have to be very well defined. So in this case, you have support around here, I don't know, 28, 30-ish, and resistance at 50, 52. So you're right at 20, 22 ticks. Is this tradable? This range right here on crude? You got support at 29.30 and resistance at 50, 52. Is this a tradable range by our definition? Right on the cusp. Remember we said it barely, I would say, Brian. Yeah, 20 to 25 ticks is the minimum, so you're right on the cusp of tradability. Now, pop quiz. Make sure everybody's paying attention here, okay? Now, if you were going to trade this, and I'm not saying that you would, but if you did, would your primary mode of entry be to short the top here, cover at the bottom of the range, or would your primary mode of entry be to get long? So that would be an L. You would type in an L for long, S for short, or would you trade both ways? If you were to trade this range, hypothetically, would your primary mode of entry be S for short? So you'd be shorting the top of the range, covering near the bottom. L for long. In other words, you're buying the bottom and getting long and taking profits at the top. Still got a little bit of that cough left. My apologies, everybody. Or B for both. We'll give you 5 seconds. Basically, you got an S, an L, or a B. Here again, this range is just barely on the cusp of tradability. 3 seconds. Cast your vote, team. S for short, L for long, B for both. Time's up. My answer for this would be S. Now here's why. Now that being said, I have to point something out. We're missing some data over here. Okay, we don't. It appears that with the red background, I am assuming over here in this data from the 8th that we were in a downtrend, right? I'm assuming that because of the red background. Now, if we are in a downtrend and you go into a range, so you get consolidation after a big move down, I'm kind of assuming there was a move down over here, right? What the heck are you doing to me here? Oh, you're killing me. Okay, yeah, so we're assuming. So the answer would be short. You want to be shorting the tops because you've come off a downtrend. You have a red background. The bars are predominantly red and yellow. You're hitting resistance and rolling, so these are retraces. Okay, kiss and roll, kiss and roll, kiss and roll off the midband. Good. I wouldn't trade both here, mainly because you can see here that it actually went and broke support. So when this happened, and this is all you knew at the time, you could have been assuming that this was a continuation of the downtrend itself, the way this is breaking. See it? See the kiss and roll, kiss and roll. Now, I'm not going to get into detailed entry just yet. I will come to that. I'm still focusing on market conditions and how to trade them. Okay? Now, let's take this off for now. And let's take this off for now. So I'm going to replace them with these lines here, which don't extend beyond the line. I'm intentionally doing that for a reason, which I'll show you in just a second here. Now I want to blow this up here. Excuse me. Okay. Now clearly something has changed. Over here you can see the background starts to change. We start to get blue bars. The market starts heading up. Everybody sees that, right? We go into a long, protracted uptrend. But the question is this. Where does the trend change, and where could you take the trade to get in? Is it at A, here? Is it at B, here? Or is it at C, here? Type in a letter, 5 seconds on the clock, cast your vote. A, B, or C? Which one of those locations would be a possibility for you to take a long trade, either through a box, using the object trader tool, region box, or market order, limit orders? You know, there's all manner of ways to get in here. Any one of the tools to take to get in. So there's 3 seconds left. Cast your vote. A, B, or C for long trade entry. One second. Cast your vote. All right, time's up. The location would be B. Now here, there's several reasons why. Can you see that with this slight thrust in the market here, that you slightly break this resistance area by a few ticks, right? And it actually changes the color of the background to that neutral color. Can you see that right here? Now this is a breadcrumb clue that a potential trend change might be afoot. In and of itself, the thrust to A does not indicate that the trend has changed. right? That's not a trend change with a thrust. You need more than that. Now, here, the market pulls back, and there's actually a couple of spots that you could have boxed it with the region box tool. Right here, and then it paused again right here. Now, some of you might be saying, now hold on there, Charles. Wait a minute. This flies in the face of what you told me a few minutes ago over here. Where was your thing? Huh? Where's your thing? Where's your market condition thing, huh? When this happened, you didn't know. Now, why in this particular area would you be able to box this market and let the box go either way, long or short? Why? So B was the right answer. Everybody sees that. It wasn't A, it wasn't C. Nobody voted A or C, so that's good. Everybody voted B. Remember when we drew our market condition, we said there are some exceptions. We said uptrend long only, downtrend short only, range bound trade either way, depending on the condition of the range, right? And so we just looked at that. Now, looking at crude oil, now some of you that trade crude, you should instantly know why you would let this box go either way at this particular time on this morning. Why? Wouldn't you just go short only? Isn't it still a downtrend? There's a specific reason why you would allow this to take a long out of here. What is it? Okay, some of you are getting it. Toby, Roger, and Brian. Okay, all you traders in here tonight that typed in, I want to see CL. I trade crude. I'm a crude trader. You got to know this stuff. You got to know your instrument. Why should the box go either way at this particular point in time? Let me help you out. I'm going to move this line to the left and put it at a very specific spot. Right there. What is the significance of this number right here? Anybody? It's not green stealth. It's not the background. What time is it here? And how is that important relative to crude oil trading? 6 a.m. Pacific, 6:01. What is this time right here? It's the crude market open. So this is one of the exceptions. If you have a situation where you have a market open, whether it's the equities or bonds or crude, whatever, we're expecting movement, increased movement in the market. And by all rights, you can allow the market to go either way. That's true of 7 o'clock news events, crude inventory, you know that. What else? The Fed minutes, Fed decisions, major news events. You can allow the market to go either way because sometimes those news bots put in swing highs, swing lows, and trends change. Now, if you miss this thrust here, I don't know, let's say you got filled here and you got in, you got out up here, all right? Was there another chance to get in this trade, yes or no? And where is it located? Now, I'm doing a little bit more advanced topics here. I'll circle back and explain what you're looking at for you, especially you new folks. By the way, I see some of you are just coming in. Don't worry about this. The whole thing is recorded and everybody's going to get a copy. We'll put it on the web. Everybody will get a link. Don't worry about it. Tomorrow, if you got to leave early, don't worry about it. You get a recording of the whole thing, okay? Now, we have some definitions of trade types we like, right? Is there anything on here that is showing a trade type that we take in the room and we teach? Any trade setups here after this initial entry down here at B? You can just call them out. You can type them in. You can put a time. Here's the time down here. Let me help you out a little bit. Here's the time down here. 6:39, 6:40, 6:54, 7:03. Here's the levels. 71. Here's 89. Here's 64. Type in a level and or a time where you see potential long entries, because there's an uptrend, we're only taking longs, right? If you missed the box hit B. Okay, I see some numbers coming in, I see some times coming in, and those are looking most excellent. There you go, Toby, John, Richard, that looks good. Paul, Bruce, there you go. Kathy, excellent. You're seeing them. Roger got it. Paul, Davin, man, we got a good crowd here tonight. Most excellent. Totally most excellent. Now let me show you, for those of you who are brand new, what we're talking about here, okay? So, the three major types of trades that we take, there's lots of different trades that we take, but the three primary ones are, and I'm going to start with the most simplest one, which is called and everybody of course knows what this is, it's called the mid-band trade. So the mid-band trade entry is located at or around the mid-band itself, which is a thick line in the middle of all the bands. Mid-band trade entry. So generally speaking, a mid-band trade entry would be located in the boundaries of it are as follows. The band immediately above the mid-band and the band immediately below the mid-band, both for the short and the long trades. And of course, excuse me, bars that sit directly on the mid-band. This is one of my favorite trades. I love this trade. I take this trade all day long. Excuse me. All morning long. It's one of my favorite trades. I love when markets come back to the mid-band and they start to trend. It's beautiful. Now, when you have a powerful uptrend, as you had here, can you see that this area of retracement right here, that you did not quite get back to the mid-band? I mean, technically, you're kind of in the close to the mid-band zone. But the criteria for what we call, and you're going to hear this in the room a lot, minimum criteria trade on a retracement is you have to, in a long trade, close below line 6, the thin green line, and stealth. Right in here, you can see that we did that. We closed below line 6 and we closed below stealth, and so we put a little region box on here. And if we enable long only, we're filled on a market long right here. So if your answer to this, to the long trade entry question was anywhere from, say, 630.39 to 641 in here, you were correct. That was a minimum criteria retracement long entry on crude oil. Now let me ask some questions here. So this is a yes or no question. You're going to get 5 seconds on each. By definition, is this trade here a minimum criteria trade, yes or no? Just type in a Y or an N. This box. Yes or no. You get 5 seconds. Just boop, hit a letter. Don't think about it. Don't even think about it. Just look at it. We gave you the definition, right? Yes, boop, no, boop. That's it, 4 seconds. Does it meet the rule of the law for minimum criteria trade entry long on crude? Yes or no? 1 second. Time's up. Technically, yes. I mean, you could make the case here that it just barely clinged to it with the open and close of this bar right here. So this bar alone meets the definition. You are below stealth and you're below line 6, and so that bar alone would constitute. Now, did it give you anything? Got back to the top, you got a scalp. Okay, another yes or no question. How about this set of little bars right here? Yes or no question. Does that meet the minimum criteria, yes or no? As we have defined it. 4 seconds. Yes or no? Boop. Cast your vote. Participate if you can. That's why I allow, you notice everybody comes to my webinars, I'm very interactive. I have lots of moving parts. I think people learn better that way, that I've learned over the years. You got to ask a lot of questions. You got to participate. You got to see what, and then when you see it tomorrow or you see it next week on the chart, you'll be like, oh, yeah, that does. Look at that. That's a long trade entry. You might be looking at 6E overnight in the European session and you see a trade set up like that. It could be anything. 2 seconds. Yes or no? Y or an N, just like that. Time's up. Yes. Here again, close below line 6, close below stealth. Now, do you want to start talking about the trade entry itself? Let's segue into that, and let's use these boxes as an example. This is probably, and I think most of you agree with this, is probably the sort of the heart and the soul and the juice of trading. I mean, what I mean by that is this. You can look at this chart all day long. You can be good at seeing a range. You can be super good at seeing a trend. When a trend changes, you can see boxes, mid-band, all manner of things like that. But sometimes the trades aren't exactly what you think they're going to be, and that's where the real challenge comes in. Let's look at this a couple of different ways. Let's look at how a market retraces, and you can think of it this way. In the case of this retracement here, which we have already said meets a minimum criteria, you tell me, I'm going to go candle by candle, when you think, you want me to stop when I'm over the candle where you think the retracement is done. Ready? So just type in an S for stop. I'm going to go all through this retracement bar by bar, and you tell me with an S where you think the retracement is done and it's reversed and it's ready to go up. Okay, this one right here. This one right here. This one right here. This one right here. This one here. This one here. This one here. That one right there. This one here. This one right here. Which bar of all of these bars was the market done going down and starts to bottom out and tell you that it's ready to start going back up? The last one. Good. Why? So look at these bars that are retracing. With a couple of exceptions, would you not say that each of the bars are pretty much closing down? Aren't they all closing down? Right? Almost all of them. There's a couple, that one closed up a little bit, but it's still lower low and lower than these other two, right? This closed up a little bit, but it was still lower than these other ones. It wasn't until you got to here that this bar closed up. Is that significant? What do you think? This is the first bar in all of these bars that closed up. Is that something that should get our attention when we're looking for trade entry? What do you think? Yes. This is it right here. This is the reversal bar. This is where the market flattens out and starts to reverse. You can put a market order here. You can put a limit order here. You can box it in with an object trader box. You can use our ray tool and draw a retracement line like that. By hook or by crook, you're filled on a market order on the close of this bar right here. Okay? Let's do another one. Just do a couple quick more ones, and then we'll look at the short side. I don't want to spend all day on this particular area. It's important that we cover this, but I don't want to spend all day here. All right, let's do that same exercise with this retracement here. You tell me to stop when you think that this retracement is done and it's ready to go up. This bar here, this bar here, this bar here, this bar here, this bar right here, this bar right here, this bar right here, this bar right here. Which one of these is the market done retracing and it is ready and poised to start to head back up? Which bar? The last one and the next to last one? Good. Yes, right here. Let's do one more. How about over here? So what are the characteristics? So what we're saying is that bars will continue to get lower highs and lower lows, and for the most part, they will continue to close down in the retracement on an uptrend, yes? Until you get to equilibrium. So what is happening here? What's going on? Why are all these pullbacks happening in the first place? I don't understand. Happens all day long. Markets go up, and they go sideways, and then they come down, and they retrace, and they pull up, and then they pull back. Why are they pulling back? Why is this happening? Huh? What is it? Why is this happening over and over and over again? Over and over. Up, back, up, back. You see it all day long. Profit taking. So buy programs that are running in the market from the big boys and some discretionary traders, all market participants have profit goals. And, the market participants in crude who got long from lower levels have reached a sufficient point where they want to take profits. And so as they take profits, they start to do what? Just what you do. Same thing you do. The sell programs do the same thing. They sell. When they sell, it creates a downdraft in the uptrend. That doesn't mean the trend has changed. It simply means profits are being taken. Now, at some point, the profit taking starts to wane, and eventually it stops, and you reach an equilibrium where the buying will resume itself. That's what's happening right here. That's exactly what that is. The buying is now ready to resume itself. The profit taking is done, and it's time to go up again. You can see it there, you can see it here, you can see it here, and you can see it here. So when you start to think about your trade entries, it's not just the box itself. The box is just a vehicle to get in the trade, right? That's a tool. But if you can understand sort of the market volatility and the reason markets are moving like this, and start to visualize where the proper spots to enter are, that's going to make a big difference in your trading. It's going to make a huge difference in your trading. Okay, let's look at some short trades. Any questions on the long trades? Any questions on what I've shown here? This last one turned out to be a killer. Look at this thing, dang. We probably took this the other day, didn't we? We got in around 80, 85. Where to top out? 55 ticks. This trade alone set up just after 7 a.m. Pacific time. I'm sure we took it in the room. I'm not certain exactly what day this is. That's like 50, 55 ticks. One lot, that's 5 bones. That's $500. One lot. Two lot, that one trade right there is $1,000. 2 contracts. Yeah, so you can make money trading crude, no question about it. I don't see any questions on the long side trade entries. Let's get over and look at some shorts in a downtrend, okay? It's going to be hard because crude doesn't have many shorting opportunities because it's been going up for so long. Let's try to bring up a gold chart. Let's quickly move to a gold chart here. I think I got that right over here. There we go. Okay. All right, let's get Goldie up here. Come on, Goldie. Come on, Goldaroo. I mean, I'm going to show gold in a short trend for an example, but this could be any chart really. Just put whatever instrument you on. The entry techniques are all the same. There's nothing different when you start to take gold trades. I'm going to do a different quiz here. I'm going to advance a chart as if we're recreating real time in gold overnight. Yeah, Kathy, put the money in your pocket. You want to lock it down. So our whole goal, by the way, most of you have heard this saying, and we live by this for 10 years. Nicely green, turn off the machine. So your whole goal in trading is not to catch as many trades as you can. It's not to cover 4 markets and catch every call. Okay? The goal is to narrow your focus down to 1 or 2 instruments that you like, get very good at trade entries on them, and then be very picky and choosy on your spots and only take 1 or 2 trades in the morning and be done. Now, if you get very efficient and your win rate goes up, what do you do to make more money? Let's say you get really good at crude. Like for whatever reason, you're just in tune with crude. You just see the thing, you hear the calls, you're taking it, your win rate's up there, 70, 75, 80%. Your losers are real small. How do you make more money? Once you got it, once you nailed it, you got it down. Any ideas? There you go. Right, Bruce. Roger, Weldon, Jai. Increase your contracts. Add a contract. Right. You leverage. You leverage up. Now you want to start low with that. Okay, you just don't pile 10 contracts on and go crazy. Because the risk side is you can still take some losses and you don't want big hits. That can mess you up, psychologically, mentally. Now you're all cattywampus and sideways. You don't want to do that. Okay, just take it real slow. All right, let's look at, I'm going to help you out. I'm going to advance this gold chart. This would have been the after-hour sessions on the 10th. So this would have been yesterday going into the Asian session. Now what I want you to do is when you think a short trade is setting up, I'm going to advance the chart, pretending we're watching it in real time all together. We're all going to watch it together. I'm going to advance it, okay? And when you think you see a short trade, simply type in an S. Okay? Okay, so don't type anything in here. Our starting point is here. Don't type in an S. Come on, I haven't even started yet. This is not an S. Okay, I'm just helping you out. That's not an S. All right? Okay, so take the S back. There we go. All right. Okay, here we go. All right, 1648, this would have been, let's see, 15, 16, just the beginning of the Asian session kicking off right here. 17, 18, that would have been 6 o'clock yesterday, my time. Blow the bars up a little bit here so you can see them real good. Okay, 21:42, we're coming up on midnight. The European session is getting ready to start. European session is getting ready to kick off. Let's make the bars super big. Here comes midnight. This is you night owls, trading gold. Night owls are staring at gold. You got your coffee pot cooking, drinking some coffee, trying to stay awake, watching the gold chart. 22:50, what would that be? That'd be 10:50, almost 11 o'clock. So you're still in the Asian session. Okay, 2300. There's midnight right there. European session kicking off on gold. All right, I'm going to stop it right there. Now that you look back and you see all the bars, does everybody see the trades? So in a downtrend, it's the converse of the uptrend. The uptrend, you are the thrust, the push of the market is up, and we buy retracements, pullbacks into support, minimum criteria, mid-band, deep retracement, whatever. Yes? Now, here we went sideways. Here we have a thrust down where a support level is clearly broken, right in here. And then it comes back up. Now, I have to tell you, some of you typed in an S when these bars formed right here. Now, you could have taken that trade and it actually worked out. But in my view, let's go back to where we were at the time this happened. Okay, we can't just kind of armchair quarterback this and say, well, I look to see back, I should have taken a short there. Well, no, hold on a second, okay? Yes or no question. At the time this box formed, were you in a downtrend yet? Yes or no? At the time this box formed, were you in a downtrend yet? Yes or no? 5 seconds. Wiring in. Boop. 4 seconds. Time the box formed, yes or no question. Are you in a downtrend yet? Yes or no? 2 seconds. Box forming right here. We gotta suspend disbelief. We can't look forward and say, oh, well, now I know what I should have done, because real time doesn't work like that, right? Real time comes at you just like I did it. The bars are coming at you. You don't know what the future holds, right? No, this is not a downtrend yet. You probably would not have boxed this and let it take the short side. If you did, you got very lucky, and it did work out. See, that was an okay trade. You got a scalp out of it. Now, let's continue on. Let's continue on and continue on. Now, when these bars are forming right here, what type of trade is this? Clearly, while you ponder that question, everybody can very clearly see, there's no question about it on this chart, that the thrust in the down direction was right here. So there is follow through. Support was taken out. Background turns red. Bars are predominantly red. You have a red stealth. Mid-band and all the bands are stair-stepping down. This is a mid-band short trade setup. Yes? How many of you got this? How many of you typed in an S here? This is where the S, you should have typed in an S as these bars formed right here. How many of you got it? If you're new, don't worry about it. You know, if you have trouble seeing this, you know, it's okay. It takes time. You'll learn. You'll train your eye to see it. You know, it's a memory. It's a muscle memory thing. The more you see it, the more you learn it, and the more you see it, the more you'll be able to take it. A lot of you nailed it. Yeah, I see that. A lot of you typed in S's right as those bars were forming. That's a mid-band short setup. Right? Excuse me. Pardon me. Now, that trade broke. You immediately got a scalp, and you went into a running condition. Now, let me ask another question. I'm going to advance the chart again. Is these bars right here considered a minimum criteria trade entry on the short side, yes or no? Just a yes or a no, 5 seconds. Minimum criteria short. Yes or no? Okay, we see the midband. This was the initial S. This was a questionable one because we hadn't changed trends yet. So now the third box is this a legitimate minimum? Does it meet the criteria for a minimum retracement to get short? 1 second. Time's up. Now let's analyze this in detail. You could make the case, and it's right on the edge of acceptability, right here, that you had a bar that went above stealth and line 2. So that is the minimum criteria on the short side, of course, right? Just like the long side, you come under line 6 in stealth, the green stealth, right? The reverse is true for the short side, right? So you need to come up above the red stealth, which it did, broke that. Yes, you see, no question about that. And these bars here are struggling to close above line 2, the thin red line here, right? See how it's struggling to close up into here? Now, the ideal condition for a minimum criteria would be that they get up into here, right? They get up into here and form a little consolidation patch and then roll and break down and you get in the short. This is right on the edge. Now, the reason I'm saying that is that sometimes if you're in a market that is really selling off, okay, it's really taken off. The sell programs are pumping. I mean, they are just dumping gold, right? It's thrust, pullback, thrust, pullback, thrust. And watch what happens to this. And I'll circle back to it. Wait a minute. I got another yes or no question. How about these bars right here? Minimum criteria short, yes or no? What do you think? What say you, team? I'm going to give you 4 seconds on this one. You should become an expert at these. You want to get to a point in your, in your subconscious where you just, it's kind of like breathing. The bars come where you think, and to get in, you put the box, you pull the trigger, you get long, you get short. 2 seconds. Well, this is another marginal one, but I'd put this one in the yes category. You're sitting on, you've closed above stealth, so that both of these have closed above stealth, so that part of the requirement is satisfied. Stealth is the snaky green and snaky red line here. We've had this on our chart for years and years and years. We use it for a trail stop. But we close above it here, no question about it, and we sit right on line 2. Excuse me. Sorry. Here again, ideally, the bars would have come a little higher Now, does everybody understand the logic of why we set these minimum criteria? Why do we say it's got to come up there? Why do we say that? Is that some arbitrary thing we just sort of come up with? Hey, looks like it should come into that band up there, and then we'll get in. I mean, is that just some kind of random thought we were, sitting around one day? Hey, where should it be minimum criteria? Well, let's look at it from a logistical point of view. When a market comes in and it's selling off like this, and it puts a swing in down here, in this case it was 0730, right? There has to be a sufficient retracement for there to be a likelihood for the follow through to come back down on a rollover to at least this point to get a scalp off. Now you can clearly see that these bars here do not meet minimum criteria entry because they have not broken stealth or line 2. So there is not sufficient distance. There's no meat on the bone on the trade. By the time you get in with some slippage and commission, there's just nothing here. Okay? So if you're ever wondering why these areas are defined as they are, it's because we've studied this over time quite extensively. And we have found that in these powerful trends, when you start to retrace up into this area here on a downtrend in the mid-band area and up in here, there is sufficient meat on the bone for a rollover to continue back down to the swing. So your risk return is fairly low, right? Because you put a stop up here, your stops are just above here, and your return is here. That's why that's why there are minimum requirements. Now, could you have taken this trade? Yes. Could you have taken that trade? Yes. And the exception that I want to embark upon you is, now it's good to know the rules, but occasionally there are exceptions. The exception would be if you're in a runaway market and it doesn't get all the way up to where you want it, and it doesn't even get near the mid-band, you can go ahead and take those. Now in the room, when we say that, you'll hear, look, you could take a short there. You might hear a call like that. Gold is coming close to being in a minimum criteria retracement above 0850. You might hear something like that in the room, right? And then the follow-on thing would be, if you take that, keep a tight stop. So what does that mean? If you take this, if you take one of these to short it, it's not quite in the minimum criteria. What does tight stop mean? What are we talking about? What the heck are we talking about getting in here and you got to keep a tight stop on in case it runs against you? You've heard that in the room like 100 times. You have to. I mean, like in the past week or two, that's every day it comes up like half a dozen times. Easy. Yeah, your initial stops are super tight. Okay? So you get in on, a bar close, market order, limit order, you're filled on this bar, this bar, this bar. Now normally you would have a, 10, 12 plus tick stop. So, your stop would normally be way up here somewhere. Say a 1 lot or a 2 lot, your stops will have 10, 12, 14 ticks, so it's way up here. Should you leave a loose stop when you go ahead and take these? Where does your stop want to be when you take something like this? Let me help you out. Would you put it like right here? Super tight? So, it rolls over, and this one stopped here at a lower swing and actually gave you another chance to get in. But let's say hypothetically it didn't. And all of a sudden some news came in and banga, the thing takes off like a rocket. Yeah, so that's what we mean. Go find the swing that you got in right at, okay, and put it just like a tick above that. That's what we mean by if you take that, put a tight stop. That you can go ahead and take that trade. Now let's look at what this turned into here. Look at how this thing sold off overnight. This is just incredible. I'm going to tally some totals in a minute here. There's a couple other minimum criteria right here. Here's one. Everybody see it? Right, another fringe one. See how you get the fringe ones? So what's happening here is there is not sufficient short covering to cause the market to get back up to the midband. That's why you're seeing these thrusts down and these little pullbacks. A little bit of short covering, and then the sell program kicks right back in. Sell program, sell, making profit short. Little bit of short covering. That's all you're getting. Short, all the way down. Let's say that you rode this pup all the way down to here. And let's not count all the entries. Let's not say you got in here, 1, 2, 3, 4, arguably 5 times. for that last scalp right at the final gasp down to the low. Let's just do some round numbers on this whole move from here to here to give you a sense of what. Now, how much is gold worth per tick? Anybody? How many dollars per tick on gold? Anybody know? What's one tick of movement equal on GC? $12.50, $5. Excuse me. Take a sip of tea here. $10. Let's say you got filled short. Oh, I don't know. Let's use a round number. Let's say 11, 13, 11. And you covered down here at $12.99. How many ticks per point? How many ticks per point on gold? Anybody? 10. All right, so you got $12.99 to $13.11 is 12 points. So 12 times 10 is 120 ticks. So one contract on this move right down here from this short entry around $13.11 and change, depending on your actual fill and some slippage. And you write it down, maybe you stop and get back in, you stop and get back in, you write it down, stop, get back in, catch the final scalp, and you close around 99. That's $1,200. Two contracts all the way down would be $2,400. This would be a $2,400 trade right here. That one trade right there. That'll make your day, huh? What do you think? How many would you be one and done? Remember what we said? Nicely green, turn off the machine. Nicely green, turn off the machine. Now, a lot of you I know for a fact, because I used to do this myself, so I know it pretty well. You make some good money on a trade, and then you continue to trade, and you wind up giving it all back and then some, and you end the day with a loss. Now, if you're caught in that loop, which I was for a long time, okay, mea culpa. Many, many years I was in that, okay? I'd get up early, do a couple good trades, up a few $100, maybe 500 more, and then I'd go in, I got the market by the tail. I'm going to clean up. I could double this. I'll make more. Sure enough, you take a pop, give 100 back, 200 back, 150 back. Next thing you know, you're back. Now you're revenge trading, right? Now you're revenge trading. You want to get that money back. You're upset. You're mad about it. If I'm describing you, anybody in here tonight or anybody listening on this recording, you got to get out of that loop. The goal is to take one or two good trades, hit your goal, and be done and stop. All right, that's a wrap. Any final questions? I'm going to stop it there.